Hello, YouTube. What's up? Good morning. Welcome to my garden. I hope everyone's doing well today. Happy Monday to all. Sorry, I gotta scratch my nose. I don't know what that's about. Apologies. This isn't the most scenic thing you should see. But good morning, everyone. Hope everyone is doing well. And we're starting the week. Happy Monday to all. And this week we have a main key event, right? We got the CPI data that's coming out on Wednesday, pre-market. That's going to be very important. We're going to talk about that today. But first things first, let us go through a few things. We got some slight downside here overnight. I wanted to see this market run a little more, but again, pretty bad bid over the last few weeks. There was outflows. For those that are in the TradePro community, you guys watched that Mal, hopefully, and we talked about those outflows, how they could be a little toxic, if you will, right? There wasn't really any money inflowing into the market that heavily in specific sectors, but we'll see how this shapes out. The main thing that I do want to talk about to start this off is going to be Nord Stream goes offline, right? They're going offline as energy concerns in Europe continue to increase, right? So Russia is again at the forefront of this. What is that? Is that a pen mark? Got distracted. Russia is again at the ground level of this, right? They're looking to position a potential squeeze over some heavy sanctions and support of Ukraine in European countries, like in the EU. Now, Russia supplies the EU with 40% of natural gas imports in countries like Germany, for example, that have figures as high as 60%. So natural gas is used for heating naturally, consumer heating for consumers, I should say, electrical power as well, power generation, and a lot of that for heavy industry work. So it's a huge component, and especially in the winters, right? Heating in the winters. So Russia has slashed recently capacity to Germany via Nord Stream 1 by 40% over the last week. So just as the country was attempting to fill up its storage for that winter time, right? We're getting into that season at this point. Better do it in the summer. And these cuts were caused by sanction questions over a turbine that was being serviced in Canada, actually. But another disruption will hit the important pipeline over the next 10 days, with annual maintenance work taking place between July 11th, today, and the 21st. So Germany and other EU countries are pretty fearful that the Kremlin could extend shutdown due to the war in Ukraine, or even might turn off the taps for good. So a lot of that we've seen, not necessarily too much impact the U.S. side of things recently, but we've seen a lot of action in the European space based on this. I know a lot of countries have already been cut off like fairly severely and more in the Eastern Bloc, but based on patterns that we've seen, it would not be a surprise now if some small technical detail is found that they could say now we can't turn it off anymore, according to Germany's economy minister Robert Habeck. So the country has already raised the alarm and its emergency gas plan, and next level would see that the government rationale consumption and assume control of the entire nation's disruption network. So Germany has also reopened several coal-fired power stations, right, to shore up supply, with Dutch TTF natural gas futures, a European benchmark, up over 400% this year alone. So remember when Germany did take away that nuclear power, right? Now they're being forced back into coal, which is not the best of standings based on what had happened recently. So it's going to be very important to watch how these things unfold to see what happens in that block, because Europe is already under I won't say under attack, but it's under fire in the economic sense, right? We've seen the ECB, we've seen Italian banks, right, are looking at reinvestment risk. ECB looking to raise rates for the first time in a very long time and do that so aggressively, and they're in a similar position to that of the U.S., where they're trying to engineer this monetary policy that would result in a soft landing. But all of this energy disruption is not going to help that, right? Especially when things are more expensive on that front, you are going to see things like inflation continue to rise. So speaking of inflation, we got one of the most important reports that we're going to see this month, right? And it is that CPI data that's set to come out on Wednesday, 8:30 a.m. Eastern, the July 13th, right? I'm just checking the date right now. July 13th, we're seeing that CPI Consumer Price Index, and there has been talk that the expectation is going to be greater than 9%. We also have things like retail sales, right, which obviously will have some kind of impact. But the volatility is mainly going to be centered around that CPI report. And there is talk about a potential print over 9%, which is the highest we've seen so far, right? And the expectation, ideally, right? The ideal scenario is that we actually taper off and we're starting to see a peak in that inflation and we're starting to turn down. However, with all these things going on, we could see that 9% print, which would really, really put a damper on this market. Now, I don't think the lows are in necessarily for the end of the summer, right? Because summer extends into September, but the temporary lows, maybe even for midway this month, I thought we'd see a little more upside, but right now there's a huge question about the CPI. And overnight, markets did fall, right? They fell a decent bit. And my thought process was as long as we can hold 38.70, right? We can look to attempt 39.50 as a upside potential before actually seeing things start turning. Ideally, I would have wanted to see it at 4050, 4072 before we started capitulating, but seems like the market has other plans, right? It always turns when I'm not least expecting, but just before those areas that I want it to. Now, we have other things like Q2 earnings are also set to begin, right? With financials starting to report this week and other consumer staples kind of leading the charge. There's a lot of companies that are likely to show elevated input costs and slower consumer spending. That could weigh on outlooks that are into the second half of 2022 and even further beyond. Now, we've already seen that a lot of those tech names have warned about crappier forward guidance, or maybe not talking about forward guidance. But the point is, we've seen job cuts, we've seen job hiring freezes, we've seen forward guidance being talked down, and this is setting up to be a rough potential earnings season with increased inflation. So there's no real way to call this a bullish scenario as it stands, and I don't think those lows are in. Overall, naturally, I think they might be in maybe for July. We'll see how this shapes up. But we have three main events into halfway through July and into the end of July. CPI, the first one, earnings that are going to be throughout July. Towards the end of July, we have a lot of the tech earnings like Apple and whatnot. And then we also had the Fed's funds rate, which last Friday, right, we saw that the jobs report actually came out a lot stronger. That might have subdued some jitters about the economy, right? That may have tipped already into a recession. But at the same time, when we have that strong labor market, the Fed is given the green light to go ahead as planned with the quantitative tightening, with the rate hikes that are expected now. Yesterday, when I checked it, we had about a 7% chance of a 100 basis point rate hike coming into the end of this month. Now, I want to check it right now just to make sure, because these things change, right? And yeah, 7% right now, 93% of a triple rate hike, 75 basis points are priced in at 93% by the end of this month, July 27th. Now, there's a 7% chance there's a 100 basis point hike by the end of this month, right? This is not a bullish scenario, right? You're getting a lot of bearish things lined up. And realistically, people who think that we have bottomed already and we're set to all-time highs, there is no evidence that that is going to be the case from a macro perspective, from an internal perspective, from a flow perspective. There isn't really anything that's telling us, hey, this is the bottom, let's get the hell in and hold it for 20 years. There's nothing there right now, and those recession fears are still looming. Now, realistically, we're probably going to be in that negative GDP growth quarter, right? It's already, the prelim has already come out negative. I doubt that it's going to change that much by the time we actually get the real number. So that's something to be very, very cautious of. So this week, again, I'm very, very focused on what is going to happen with those inflation numbers. And I think everyone in the market's going to be waiting for that to see how that shapes up, right? That's where a lot of that volatility is going to stem from, and it could dictate the movement into the end of the week. Now, the beginning of the week, I could see maybe they try to catch a bid and keep it a little slower. I am a little more bearish into the end of the week, especially when we're starting to see banking earnings coming out, right? I don't think they're going to be doing that hot, especially with these inflation numbers. Mortgage rates are extremely high. I doubt that. And the demand is not there for renewals and mortgages. And then the only chance that these bulls have is going to be today and tomorrow, in my opinion. If we start losing ground today, it's not looking really good into the end of the week, right? The key level, 3, 8, 70 to 72 on the S&P futures. I want and need to see that hold if the bulls are going to show up. Now we have the immediate resistance at 3885, 83 into that area. If that fails, if we can't bid above that, the most likely we're going to see that scenario that breaks down under that 70-72 area. Now, the key area for this week for the Bears and Bulls, right? Massive area, 3,840, right? The 3,840 to 3,845. Realistically, if we accept back below that distribution, I think it's done, right? I think we're going to start accepting lower and lower and really start testing those areas. Volatility got fairly cheap last week. We'll see if it can get a little cheaper today before we start looking for that long volatility play. But realistically, volatility into Wednesday and into the end of the week is probably going to start getting elevated, right? We're going to see that spike in volatility. Now, in terms of flow, right, I was taking a look at the sector flow and all that good stuff, right? I was looking at tech sector, and even on those strong green engulfing days that we had seen last week, the flows were very, very limited on the inflow side, and a lot of the other sectors that had those nice green candles on crappy volume had a lot of outflows coming in. So that's something that we really, really have to monitor and be careful with, because we could be looking at this from a chart perspective and thinking, hey, we're good, we're crossing this, we're crossing that, we're going to the moon. But realistically, the underlying is still more bearish into the end of the summer, in my opinion. So we'll see how that shapes up. We got a day ahead of us. Keep in mind that 3,870-72 area. You lose that, there's going to be more sell side, right? They're going to try to sell it, but I want to see if they can buy it these first 2 days, right? The buyers have to step in Monday, Tuesday, because I don't think they're going to get that chance on Wednesday unless we get some, like, I don't know, like super crazy report that's like super bullish, which I now don't think so after seeing all of these expectations. But let's see how that goes. Let's see how that shapes up. We're going to be opening the rooms today, and I'll see you guys tomorrow. So enjoy. Happy trading day. Check us out on our website for free master classes, options and futures, and check us out, community.tradeproacademy.com. That community there open to the public, where we post analysis on a daily basis, on a weekly basis, and more plans every day. So check us out. I'll see you guys there. I'll see you guys tomorrow, and let's have a good start to the week. Trade smaller. Let's see where we're going. Let's get a little directionality in our mouths, and then we'll eat some more. So I don't know what the hell that was, but I'll see you guys tomorrow.